Eurcad. Okay, so chart's a little ugly. We'll clean it up here. So based on this, just looking at it now, I mean, it is bullish. It's still above this moving average, but it's definitely weakening. So you can see if we scroll back here, you know, tons and tons of like nothing but bull momentum, and then still had it, and then, you know, this nice little double top up here, perfect double top here, and then price comes down pretty drastically, and then finds this area of resistance. Everything tells a story here. So yeah, finds an area of resistance here, comes up, more resistance, higher lows, you know, okay, we'll go back up, can't do it, you know, only makes it to here, then comes back. So and now it's getting awfully close to this moving average. There was a zone here, a little zone that I drew before, and it's broken this now, and seems to be holding below that. So you can see the bears taking over on this pair. So looking at the 4 hour, you can see lower lows, lower highs. So, and price did cross over this 4 hour moving average and is now, you know, now bearish on that time frame. So if you create a zone here and then price breaks that area, I mean, we're probably going to go lower. So what I'm going to do is I'm going to figure out my monthly range here based on its normal true range. So for this pair, it's about, I have to estimate a little bit because it's brand new start of the month, so it really affects the average, but we'll say about 500. So if the range is about 500 pips, we have to figure out where a high is going to be. So we'll base our high off this first little area here. It's actually probably pretty good, 146. And if price moves 500 pips, we're shooting for 141. So I picked 146 because that is where these last wicks are, and I mean, price does look like it's ready to move up a bit. You can see there's a previous zone here of these wicks. So that is, as of right now, I'd say 146 is a good bet. We can always adjust that if we need later. That doesn't, it's not super critical that's perfect, but I like to pick whole level that's close, that's, you know, that's got some wicks in the area. So because price is going to gravitate towards whole levels. So if it's going to move up, it's going to move up to 146, and then if it gets stuck, well, then it's getting stuck at 146, and then you're looking for your shorts. By then your moving average catches up, and then, you know, odds are price will cross over this moving average upwards, but then cross back down again, and if it makes a lower high, like right here kind of thing, then that's a good sign for an entry. So there's no perfect setup for this yet, but there will be. We have our monthly high here. I can delete this zone, it's not important. And we're looking for price to break this area. Now if it breaks this area before coming back up to here, then we'll place an entry early on. We'll place something like this. But I don't want to do that. I'd like for it to come up a bit first, and then you can target this full area though, this full range of 500 pips though. So I'm going to draw a 4 hour zone here because it's the best I have to go off of, and then we will wait and see. Put it right to this 146 level kind of thing, and then we'll watch price come up into this area and then look for a short position. So we'll set our stop just above here, above this area. We can always adjust it once price actually gets up there. We can make sure that it makes sense, and then we target the full monthly range right there to the monthly low at 141, and that is your trade with almost you know, 19-20 R as it stands right now. Might shrink in a little bit once price gets up there and we have to make adjustments, but if that's the top of the month and it moves its full 500 pips down like that is where it's going to go, and you're going to catch that whole month's move. And if price, I mean, obviously price has to break this major zone, but if you're in the entry, if you get a good entry and you just ride it down, you can watch it, you can analyze, you can close half your position. If you take multiple positions, you can close a few of them, leave a few open. So if price comes, if you enter here, it comes down to here, and then you know, like 135 or sorry, 143.5 or 143, you decide it's looking a little sketch and it's losing momentum, then you just close it, and then you end up with, you know, a whopping 11R, which is, you know, still phenomenal. So that's how I like to trade. I like to let everything just set up and just wait it out. I'm not going to rush anything. If this takes a week to set up, no problem. If it takes a week to set up and I have to hold it for a week or two, that's also no problem. Sometimes, like, this is a monthly range, but you price very often. In a month, there's 4 weeks, right? And so 1 week, 1 or 2 of those weeks will be the impulsive move, so that would be like downwards. And then 2 of those weeks are usually corrective or just kind of flat. So like consolidation, you call it. So, and sometimes, a lot of the time, it's 1 week. There's 1 week where price moves, like 1 week, this price will move 500 pips. The other 3 weeks of the month, it'll be either pulling back a little bit or consolidating. So the bulk of your movement will happen in a week. So the bulk of the movement of the month will happen in a week is what I'm saying. So it's definitely something to be on top of and be, you know, prepared for. There's no sense in shooting for like, you know, 40, 50 pips when you can make 500 for the same entry essentially. So you just have to wait. Like, there's no sense in forcing a trade here. Like, well, we'll get in now and we'll just set our stop like this and like maybe get a 3. No, that's stupid. Just let price come up to your area and let it resist and let the momentum shift. Let price cross back over all your moving averages, and then you're good to go. So that is Eurocad, and then we're gonna wait for that.